Welcome to On the Mark. I'm your host, Howard Mark Rubin. I am so excited to present this podcast series addressing our rapidly changing world and how it is affecting industries and people in unique and interesting ways. As John F. Kennedy once said, change is the law of life, and those who look only to the past or present are certain to miss the future. The business leaders and personalities who I will be interviewing in these podcasts certainly look to the future. And I hope you come away with information and inspiration that helps you adapt in both your business and personal lives. You can find these podcasts on all major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, and on our website, getsplatzer.com. Welcome to On the Mark. We have a very interesting show today. We're talking about the banking industry. And the banking industry, to me, is an industry that has changed almost more than any other industry that I know. I remember when I was a young man and my parents banked, they banked where they could get a toaster. They'd get a toaster when they'd open up an account. I don't see many toasters being given out anymore. Then branches changed. There weren't as many branches anymore. We turned into something called ATMs, where we didn't need a whole branch for at least business banking and for some transactions. And all of a sudden, branches started shrinking. And the banking industry itself seemed to change to me in that there were commercial banks that were very different than the banks where people would just keep their money and get a CD and use banks as a way of investment. It's a totally different type of world. Today, we have with us someone who's been involved in that change in the banking industry, the changes I see in the banking industry. His name's Ed Sirlin. He's been with several banks who have gone through the changes, and he's seen the changes in the industry. And currently, Ed is the managing director of Customer Bank. Did I say managing director right? Is that what it is?
Managing group director.
Managing group director. I don't want to take away, his title, but he's one of the more prominent bankers in New York, and he's a great banker that I and a lot of my clients use. So, Ed, welcome to On the Mark.
Thank you. Pleasure to be here.
So, you have somewhat of an unusual background on how you got into banking. Not the normal way. You didn't study finance in school. Tell us how you got involved in banking and what your background is.
It's interesting. So clearly, banking was not on my agenda or horizon during school. I actually started playing music when I was in sixth grade, and it was the one thing that I was really good at. I continued. I loved it. I loved the ability to not just learn an instrument, but to be part of a group and part of a team. So I played music all through. I majored in music in college and became a music teacher. And when I graduated college back in 1977, there were no music teaching jobs at all. So my career ended in about 15 minutes after looking for a job. Literally, and not working, at that time was not an option. And so I started, my first job out of school was not in the banking industry. It was in sales, working for Philip Morris. And then what happened a couple of years later, and I went back to school for my MBA in finance while I was at Philip Morris. An opportunity came up in a major money center bank in New York, and they were looking for salespeople, which was kind of a little twist on banking at that time. They were moving away from just sitting behind a desk and taking orders and giving out CDs to wanting to go out and meet people. And the bankers at that time who were in the branches weren't comfortable going out because they weren't used to it. And for a couple of years, I was knocking on doors and visiting people, and I had no problem doing that. So that's kind of like how I got into banking. I don't want to say accidentally because everything happens for a reason, but I got into banking then and got trained, and the rest is history.
So that major banking center, I don't want to say the name, but it's the C word. That'd be
it's the C
word. Okay,
it's the C word, and it's not Customers Bank.
And not Customers Bank, right? So when you were working at Citibank, how does that differ from working at a smaller bank or a regional bank? What's it like being at what you call, I think, a money center bank? What's it doing between a money center bank and a regional bank, type of bank you're working with
Yeah.
now?
So first, I want to mention that the bankers, not the bank, but the bankers that are at the money center bank, the regional banks, they're all good people. They're all good banks. They're all good players in the world.
When
But
you say good people, you mean that they love their children and they don't beat their wives, or they're good at what they do? What do we?
maybe a little bit of both, but
Okay.
they love what they do, but they're also being told what to do. Okay. So at a money center bank, and I loved my career at Citibank back in the Walter Wriston days, John Reed days of the 80s and the 90s, where I learned a lot. But the money center banks are very large organizations with constant change and looking for volume. And their focus wasn't on relationship management, hand holding, although we did as much as we could do that under the umbrella. But they moved people around constantly. They thought it was a good idea for you not to get too close with the client. So at money center banks back then, and there wasn't a lot of technology, but it was all about, using the branches, being self-served. And if you needed something, it was just hard to reach somebody. The regional banks have a whole different point of view. First of all, they don't have all the costs involved that the money center has. And money center banks, the small business market is a very small piece of their overall business. They're very worldwide and doing a lot of other things than regional banks. Regional banks are just focused on helping the business community. So what's very different is that we're able to provide high touch hand holding to businesses. So that's the major difference. If you're a business owner and you don't need any help and you don't want anybody and you don't want to talk to anybody, the money center banks are great.
So let me ask something that has been raised to me, not necessarily by sophisticated clients, but some clients raise this: is that the bigger the bank, the safer my money is. Because if you're at a money market center, and I don't know how many billions or trillions of dollars they have in assets, that if I bank at this bank, it's safer than banking at a small regional bank or medium-sized regional bank, that your money is safer. Is that true?
Well, so that's an interesting point of view. I'm going to go back to a couple of things. Go back to 2008. I don't know if you recall, but the three largest money center banks got into trouble and were potentially failing and got bailed out by the Fed.
Well, they're too big to fail. So but is it too big to fail for a smaller bank? I know you were at a smaller bank that did fail at one time.
Yeah. Well, do you want to talk about that now?
Well, okay, let's talk
Let's
about
not go there
this.
just
Okay.
for a second.
All right.
So the Fed has its safety checks in place to make sure that nobody's going to lose anything. No one's lost money with any of the failures because somebody comes in, they integrate, and so people do think that the money center banks are safer because they're so large, but that wasn't true back in 2008. But on the other side of that, businesses or business owners that are with the money center banks can't get anything they want. They can't get anything done there, and they're completely frustrated. So there are other fail safes now that have been put in place with the regional banks to secure people's money so that you don't have to ever think about failing anymore.
Okay, but there has been banks that have failed,
Mhm.
and they've been taken over. Maybe the assets have been sold. I mean, over the years. Um, is that something that the customer, whether it be a business or a personal customer, should be concerned about? Does the customer lose money if a bank fails?
No.
Okay, what
No.
happens if a bank fails? Did you
The
lose
assets
money?
get bought by another bank. Everything just gets transferred over. And you continue to do banking the way you were before. And then you choose whether or not you want to stay there or not, but you haven't lost anything. And the Fed ensures that everything continues. It happened with First Republic. It happened with Signature Bank. It happened with Silicon Valley. So in those cases, they get taken over.
The There are different types of businesses. There are small businesses, medium-sized businesses, different industries. Are there certain industries and certain types of situations that a potential client or customer would be better off dealing with a small bank as opposed to a larger bank?
Yeah. So I'm glad you brought that up. As opposed to looking at it, whether it's a smaller bank or a larger bank for a second,
Mhm.
not every bank's the same and not every banker is the same. there are differences in what banks like to do, what they focus on, and what they're good at. So that's why it's good to have sources so that you know where to go to get what you're going to do, which typically is your accountant, your attorney, or somebody who's involved in that community. But there are different industries that some banks like versus others. And it's not so much big bank and small bank, it's more about their focus and what they're good at. And often in the banking industry, why a bank likes a certain industry is because they have specialized bankers who understand that industry and are doing it well.
Right.
It's kind of like a law firm. If you bring a bankruptcy attorney, now you can do bankruptcy work. If you don't have a bankruptcy attorney, you can't do it. So banks that don't have the expertise don't go into it because they're going to fail at it.
So there are certain banks that have greater strengths in, say, real estate or in some type of
Construction,
construction or personal services or
municipalities. Yeah.
now, is that something that's because of a particular banker, or is that something because the bank has intentionally tried to stress to be in those industries?
Well, it's kind of the same thing. So let's say the company wants to be in that industry. It's because somebody knows about it and knows how to handle it. So they'll go do that. They'll bring in the bankers, they'll bring in a team of bankers, and they specialize in an industry if they have the expertise.
What I tell my clients, and I think you kind of practice the same way, is that you're not really hiring a law firm, you're hiring a lawyer that you feel comfortable with, that you know is going to be there for you, that understands your needs. Is it the same way in the banking industry that people tend to hire bankers who they feel comfortable with rather than the bank itself? Is that more important to the relationship?
Yeah. So are you asking me if I see it that way, or are you asking me if business owners see it that way?
Well, I'm asking you whether business owners, your clients, see it that way because that's
Yeah.
where they are, and whether that's how people, when they pick a bank, they should really be picking the bank that they're dealing with more so than the bank.
Yeah. So it's a great point. So if you ask me if my clients feel that way, well, they do now
I hope
because
so.
well, but they do now because they've met us and we're able to they're experiencing now what they didn't have before. Not everybody knew that going in. Okay. So many business owners slash CFOs, when they're looking to make a change, they try to talk to somebody to see if they can make the change. But to me, the banker and the team behind them is more important than necessarily the actual bank. As long as that bank can serve your needs, you want to be with people that you feel comfortable with. And I'm not going to say you want to pick the best banker because I don't even know what the best banker means. But you want to be with someone knowledgeable who can take care of you and be able to help you. So I think the banker and the relationship with the banker and team is much more important than what the bank is.
And what should a person look for in a banker? What should they expect? What should their expectations be as to what a banker can provide and what how a banker can help them?
Yeah. So my ideal banker for somebody is somebody who's honest, somebody who doesn't beat around the bush, and can tell you the truth quickly. So if there's something that you're looking to do as the client, as the business owner, and I can't help you, don't drag that through for 3 months to let me know that you can't do it, because that's one of the most frustrating things you can do. So it's very important that you work with somebody who's knowledgeable, who can make things happen, who can serve you and give you ideas of how to improve your banking and improve things. That's number one. The second thing is your banker is also, a key to other opportunities, introductions to other businesses, introductions to accountants, to attorneys, and other things that you need. So you want a banker who's going to be interested in your business, not just sending you a wire out. Anybody can send you a wire out. You can send your own wire out, but you want to have somebody that's part of the team, and think of them as part of your partnership. Who do you want in your partnership in your business, helping you grow your business and making decisions? So that banker, I believe, should be part of that team.
What I like about working with you is that there's a certain model that I think it was started by Signature. It may have been started by a bank before that, where banking groups work independently within the bank. They become groups within the bank, and there's a managing director of that group, and that's the person who's responsible for that account. And you know who you're dealing with, and that person will take you through all of the aspects of anything banking. I know that model has extended to customer bank where you are now. How's that working out? That model. How are things going at customer bank?
Yeah. Well, let me first answer the first part of it. The
Okay.
private client group model you're talking about
Right.
was at Republic Bank many, many, many years ago
Okay.
before they got taken over, which became Signature Bank. And I would tell you that it's the best model on the street that best serves clients. It's a one-stop shop. We can make decisions and everything. The client doesn't have to go to 5 different places. You don't have 800 phone numbers. You talk to one person and you get your answers. Could be no, but you get your answer. And hopefully it's a no, but this person can help you. The exact same model is at Customers Bank with all of the teams that came over there, and it's working great.
And there are so many banks out there now. Frankly, there's banks I've never heard of the name before. And there seems to be a tremendous proliferation. People are opening banks and people are moving from one bank to the other. When clients are looking at a bank, should they really be just looking at what that bank is specializing in or what they emphasize? It's not specialization. Or should they just be looking at the banker themselves? If they're comfortable with that person, that should be the main criteria of what they're looking at.
Yeah. Just to answer the first part of your question, there's actually 1,000 less banks today than there were 40 years ago. Yeah. So there's something over 19,000 banks, I think, today. So I don't know that there's more banks on the street now. There was always like a lot of banks offering a lot of different things in a lot of different communities. So I don't think it's any more confusing than what it was before. But I think the banker and the team is very important to the business owner. But if the bank that you're choosing doesn't support what you're looking for today and tomorrow, then it may not be the right choice for you. So I think you have to look at both sides. It's not just the banker, but if they can't serve you and help you grow and do all the other things that you're doing. And I tell business owners that even if you're not borrowing money today, because you may not need to borrow money today, but what's on the horizon? What's your 5-year horizon? What are you going to need? Those other things are things that I can't do for you. It may not be the best place for you. Because if you're going to start a relationship with somebody, you want to be there for a while. You don't want to keep constantly changing it. I think you have to look at both sides.
And, I see that a big change in banking. It used to be people used to go into branches. They used to do their deposits. They used to open their CDs. They used to do everything within a branch. I guess in this world of high technology, that's not being done as much. Most banks seem to have less branches than they did before. I recently saw that TD Bank is closing a lot of branches, and I see that they're going at different models. And it's part of that change is a bank looking for retail customers who just have personal accounts, or are they looking for businesses? And it seems to be more of a dichotomy of what they're looking at. I recently passed, I was walking down 34th Street and I saw Capital One Cafe, where they combined a cafe with a bank, and they made people come in, do their banking, have some coffee. I know other banks that you don't. I remember in some of the banks that you've been with in the past. I think it's true with this branch. You don't see a bank. You don't see branches. That the branch or the office could be on the 50th floor or the 30th floor of a building, and it's really not meant for customers to come up on a regular basis. Is that economy becoming more pronounced? Are people or banks looking at either being a retail bank or being just for the business community, the commercial community, or do I misinterpret that?
Yeah, it's an interesting comment and thought. It's a little bit here and a little bit there because it's not black and white. But first, let me just say that technology has changed banking 100% from where it was. Okay, you had to go into the bank when I started in banking to make your deposit. if you wanted to make a deposit. You didn't go into the bank, you didn't make a deposit. So the branch was vital back in those days to make deposits. The other reason people go into branches, or used to, and they still do today actually, is because they can't get anybody on the phone. So you're frustrated. You're trying to get something done, or you're trying to get a wire out. You can't reach your banker. They don't call you back for 3 days. So what do? You walk into the branch to, look for help or try to talk to somebody. But branch banking in itself for, maybe I'm going to call it 15, 20 years now, is no longer the model. TD Bank, Citibank, and a lot of the other branches had branches on every corner. It was like a part of their marketing plan to show visibility. Oh, there's the branch. Maybe they thought that, and I'm not saying that it was wrong, but it used to help brand the name. Oh, I see a Citibank on every corner. I see a Chase on every corner. But now you don't need the branch to do anything. And the people that are in the branch can help you. All right. There's some tellers in the branches. Capital One started serving coffee because nobody was going into the branch. And there's a lot of real estate. So why not come in and have a coffee? Because you never know who you're going to meet.
It's got to be tremendously expensive to have this branch network. The costs of maintaining all these branches have to be huge.
Well, here and now you have to bring your own cup of coffee to the location. But technology has changed everything. So you don't need a branch. What you need is someone to talk to and someone to reach. And especially since COVID, I don't know if you want to talk about COVID or all, but look what COVID has done to business in general. Okay, talk about walking into a branch. No one was walking in everywhere. If you didn't have the technology and the ability to make your deposits, do your wires, and do your banking, there's nothing you can't do now out of the branch. Nothing.
Well, I know that let's take customers that have still cash in business. Most businesses these days are mostly credit card, but I remember I referred a client to you, which was a retail butcher shop. And he said, "Well, there's no branch here, and we get a lot of cash, and we have to put cash into a bank. Can I have a bank like Customers Bank? Because what am I going to do with all this cash? I can't send it over the internet."
Yeah.
So what did you say to that client, or what would you
You
say?
have clients that have cash that deposit it?
Well, yes, we have clients that actually deposit it. They're upstanding tax-paying clients, and they need a branch.
Yeah. So if you're a small butcher on a corner and
Yeah.
you're taking in a lot of cash and can't use that cash in your business, and you have to go to the branch to do something with the cash, we use the Brink service. That's what regional banks use. Our Brink service picks up and delivers cash now. So if you have several restaurants, that works easily. If you have one location, it may not be the best fit. That person might be best being near whoever the closest branch is. So that might not be a fit. Most retail establishments now, I don't know if you've noticed, are going cashless. There's signs in the window that's cashless now. I don't know if you know what Apple Pay is, but
I'm aware.
Okay, so Apple Pay is taking over. People don't even carry their wallets anymore.
Yeah.
So you go everywhere and you pay, and then you're done. In Europe, there's no cash. Everyone is using different apps to pay things. So I think that's slowly going away. It's no longer impacting the commercial business of our community in terms of banking. And individuals aren't using cash anymore either now. I mean, the ATMs, which used to be like such a big thriving business, it's hardly being used anymore. Who goes into no one's depositing cash at the ATMs, and how much cash do you take out of the ATM now? It's not what it used to be. So it's definitely changing.
So let's talk about the future of banking. What do you see in the next 3 to 5 years with the changes from the trends that you see, how the banking industry is going to change in the next 3 to 5 years?
Yeah. So, for the past 5 to 10 years, I always thought about, is my job as a relationship manager going to go away? With technology and all the other things, and the internet or whatever,
And AI. Is
and,
AI going to
and AI, what is AI going to do, right? So are we going to get to the point where people are not going to need people anymore? And up until this day, that has not happened. As a matter of fact, it's gone the other way. People are screaming to talk to somebody to get some help. They're still using technology, but you still need to be able to talk to somebody. So I don't think relationship management and the ability to work together and do deals and help each other. Banking tried to automate credit process as an example. Why do I have to go sit with somebody and give you financials? Why don't you just pull my credit report? So they tested that in the large banks, and it failed because lending to businesses isn't black and white. The relationship is really half the battle. I mean, is this somebody you really want to lend to? You look at somebody in their eyes. Well, the answer is no for you. But I'm saying if
Thank you.
you're talking to somebody, it's half the puzzle as to, do I really want to do this deal and lend to you? And then does it make sense? So in the next 5 to 10 years, I don't think relationship management is changing. And I don't think there's any major changes going. I think, technology will continue to grow. One thing that technology has done for small, medium-sized businesses, because I can go back 30, 40 years and tell you that if you were a small, medium-sized business, you couldn't get access to any technology. But now you can do everything online and use all the better treasury services that are available. So I think that'll continue. I think relationship management is going to continue. And I don't know what else is going to happen.
You mentioned lending. I want to get into lending a little bit. Um, uh, I have been frustrated when clients come to me, particularly in the construction industry, also some extent in the real estate industry, and they want to borrow money. And ultimately, what I'm usually told by bankers, including you, is that if they want to borrow money, the bank wants the entire relationship. They want all the deposits. They want everything moved over to that bank. And I understand that. I think it was I met the president of your bank, Sam Sidhu, the other day, and he called it the deposits or the raw material of a bank. That's the term that he used, and it's essential because if they don't have the raw materials, they can't do the lending. So, they go hand in hand. But I'm finding that more and more of my clients are going outside of the traditional banks to do their lending. They're going to life insurance companies or different capital lenders. Um, when when someone comes for a loan to you, oh, generally, what do you consider to be a bankable loan? And I know that which is something that you're very good at, that you do for clients, if it's not a loan that you think is bankable at your bank, you will find alternatives for those clients where they can get the funds that they need, which is one of the reasons that people should look at bankers, I think, instead of just banks, because you want someone who's going to be your partner to help you solve a problem, whether they can solve it within their structure or whether they're able to think outside the box and find something else. But tell me about lending criteria and what banks look for.
Yeah. First, I would like to say, because I feel very strongly about this, is that in my 45 years of banking and lending, nothing has changed. And what I mean by that is that you still need to make money. You still need to have the ability to pay it back. Banks are public entities, regulated. I don't want to go into the regulations, but every hour. So there's certain things and ways that we can lend to a business. That hasn't changed at all. So how we're lending and who we're lending to is the same way. There are many other sources available now to business owners that was not available to them 20, 30 years ago. And if you don't have the capital, or if you're not showing profitability, or you don't fit this box for the bank, the banker should be able to help you go to those sources and be able to do that. There are some clients that are not bank ready, credit ready, that can become credit ready, working with the accountants and working with the banks to get there. And it may be in their best interest to do that once they understand it. But it's very confusing to the general market as to why I can't borrow, what do I need, and how do I make that happen? So the bankers, I think, a critical point in being able to explain that and understand together with the accountant of what they need. So the traditional lending, we can't take any risks. We don't make a lot of money on lending. What's the spread on lending? It's not a lot of money. So if you're not making a lot of money on it, how much risk can you take? So we keep the risk down. You lend to the companies that fit that box, were regulated, but others are available to be able to lend money to them in different ways.
Now, is the money market centers, are they more aggressive in lending, or is it the size of the bank? Because I know that banks, I don't want to also get into the ratios, but a bank can, has to have a certain amount of reserves against what they're lending.
Yeah.
Is Did you ever send someone to a money market bank for a loan that you wouldn't be able to make?
I have never sent the loan to a money center bank. And it's not because they may not be doing the loans, but money center banks pick and choose depending on the time of the day, the month, and the year of what they do and what they don't do. They go in and out of the markets, which is the biggest frustrations that businesses have or used to have with money center banks. So let's say you're in the construction industry and you're now one of the money center banks. Somebody new comes in and says, I don't like that industry, we're out. So you get a letter from the bank and you say, we're no longer in your industry. You need to find the bank in 30 days. I don't think you want to be with banks that are going to in and out like that. It's not good for your business. So I don't go to money center banks. They traditionally will do traditional loans like regional banks do, but in a different way. Regional banks, let's say there's a box of loans that they're doing, but let's take for example, Customers Bank. We have niches in other areas, SBA lending. We lend to private equity funds. We lend to different groups of companies that we have expertise in. We have the bankers doing it. So you have to understand who's doing what and where they're doing it, and having the right person to talk to who can direct you to that person really is the thing to do. You can't just open up the door and call anybody.
Now, let's talk about mortgages for a minute. Even though I've known you for a long time and I thought I knew your business, I never thought of your banks as a bank that someone would go to for a mortgage. I felt that they weren't competitive, that there wasn't something that you would go to. And then I had a situation and I mentioned it to you, and you actually pointed out that there are advantages to going to a bank like Customers Bank for a mortgage because they're actually keeping the mortgages, they're not reselling them. Can you explain to the listeners as to why someone should go to a bank like yours for mortgages as opposed to just going to a mortgage broker?
Yep. So let me just clarify. We're talking about residential mortgages
Residential
now.
mortgages.
Yeah. On your personal home. So there's a difference between portfolio
Or
loans.
commercial, loans too. Let's talk about both as to
Yeah,
what the
well, let's talk
difference is.
residential first,
Okay.
and then we'll talk about commercial. So in the residential market, if you're doing like a Fannie Mae, Freddie Mae loan, all of those loans, the money center banks sell off those loans. Okay, so they're restricted to what they can and can't do in terms of guidelines. So if something doesn't fit exactly, there's not a lot of wiggle room there to help the client.
Right.
We portfolio our loans. We keep our loans on our books. So because we're doing the loan ourselves, we're able to look at the loan in a different way than what Freddie Mae is going to look at it and be able to make some decisions about rates and fees and structure and loan to value, understanding the client, understanding what they're doing. So we're able to help them more. If you're asking me why are we doing residential mortgages like a Customers Bank, because not every bank does that.
Right.
We have a group of experts, across the country that came to Customers Bank something like 10 years ago. And those groups of experts know this business extremely well. And we're looking to grow our business. So that's why we're in that business. Not all banks have those people. So you wouldn't be in that business unless you knew what you were doing. Signature Bank was not in that business. That was in our focus that we need to have the people. So that's why we're doing that. So it makes a difference where you're going to do your loan. Now mortgage brokers are calling me with loans because they're having trouble getting them done elsewhere. Now they have somebody to talk to, back to somebody to talk to and listen to me and hear my story, and try to help me. So that's an advantage.
And how about commercial loans?
Same thing with commercial loans. We portfolio, we keep our commercial loans and our commercial real estate portfolio. And again, here's our expertise. We do multifamily and we do some mixed use. That's what we know best. We're not great in the office market. We don't know that market well, and I know it's a little bit risky today, but we were
Yeah.
never big in that market. Single tenant, not the most comfortable for us. So we stick to what we know, and we have a large portfolio doing multifamilies and mixed uses in the areas that we know.
And is your bank, I mean, I have to say, it's not a bank before you joined that I had any familiarity with. Is it a bank that's growing in the New York market? I know they're originally from Pennsylvania, I believe, but are they growing in the New York market?
Yeah, well,
Is that their plan?
they brought over close to 140 bankers, 150 bankers over the past year into the New York area. So we now have a foothold in New York doing business here. So the answer is yes.
Mhm. And if a customer, a potential customer wants to reach you, what's the best place to reach you at? What should they, is there an email or is there something that they can to reach you?
Yeah, well, they can either call you
They can call me,
because
which
you'll
they
always
do.
call
They do.
me, but
Well, if you're nice to me, but
they can call my cell phone anytime.
okay.
Should I give that?
Yeah, you can give yourself that.
917-748-9449.
Okay. Well, I've known Ed for a long time, probably 15, 20 years. And he does a
25.
great job. 25. Okay, I didn't think I'm that old, but he does a great job for all my clients. The important thing when you refer somebody, whether it's a bank or an accountant or whatever it is, you want to make sure that that person's going to do a good job for the client, because there's nothing worse than having a client call you up and say, you referred this person and they're terrible, they didn't do a good job for you, because there's no upside in the referral, and there's only a downside. So you have to be careful who you refer to. And I'm always comfortable when I refer Ed to any of my customers. So Ed, is there anything that we didn't cover today that you want to cover?
I mean, I guess the one thing we didn't talk about was
Yeah.
networking. I don't know if you
Oh,
wanted to
okay.
talk
So let's
about
talk a
networking.
couple of minutes about networking.
Yeah.
Um, in your business and my business, I think it's true in any service business, particularly. The way a business grows is by networking. I have banks that I deal with and accountants, and you have lawyers and accountants and other professionals. Uh, what would you say to someone who's wants to increase their business? What's the best way to network for someone? How would you, what would you recommend that they do?
Yeah. Well, building your network is I think very, very important. So if you ask me, how do you go build your network? Okay. So it's kind of like on LinkedIn and your contacts. How do I build my LinkedIn contacts? It's not just accepting anybody who invites you,
Right.
because that's not really the network you want. You want to pick and choose who you're doing business with. So when you're building your network, you're building and trying to look for and find the best people out there who can help you, right? People that have sources that can help you. So for me, when I'm building a relationship with somebody, I think helping others is the best way to get someone's attention. I go back over the years and I think about, why does this person want to help me? Well, if I'm helping you, making introductions to you for other businesses and other sources of people that can help you. You're not going to forget about me. I'm going to be on your mind. So think about ways of how you can help others. So build a network, surround yourself with professionals who can help you, and keep building that, and always thinking about how you can make introductions and to help each other.
But as you know, and I want to stress, it's very important when you're building a network that the people that you're including in your network are quality people that are doing a good job for the clients. Because the last thing you want is someone in your network that you're referring business to who's not doing a good job, because that reflects on you. You can end up losing a source of business or a client yourself. So
Yeah.
it's not, you have to be selective in who you're letting into, just like you're talking about LinkedIn, and who you're going to let be
Yeah.
into your network. It's more important if it's someone that you're potentially referring business to, that that person's doing a quality job. Can't just let anyone who's sending you business or has a good line be in your network.
Yeah.
Sure, you agree with that.
And when you do refer somebody, don't just refer it and disappear. Stay involved. How did that deal go? How did the relationship go? Were they happy? If you don't get any feedback and understand how that person's doing, how are you going to know whether a good source or not?
Right.
And it takes time. Everything takes time to develop relationships. I mean, you look at you and I, we're still developing.
Yeah. 25 years later. Well, Ed, it's great. It's the time goes quickly, but we're at the end of the show, and I want to thank you for being on the mark. And I hope to see you soon. I hope you enjoyed this episode, and I hope that you've learned a lot. I've certainly learned some things. Every time I talk to Ed, I learn something, good, bad, or indifferent, but I learned something. And he's a great banker. He's in my network. He's someone that I always love to refer a client to, because I know they'll be taken care of. And I want to thank you for listening today, and see you for the next episode on the Mark. Thank you.
Thank you.
I hope you enjoyed this episode of On the Mark. I started this podcast by quoting John F. Kennedy and would like to end it with quoting one of my favorite baseball players, Nolan Ryan. Enjoying success requires the ability to adapt. Only by being open to change will you have a true opportunity to get the most from your talent. I wish you success in staying ahead of the curve instead of behind the 8 ball. Thank you for tuning in.